All right, guys, welcome to the show. This is getting a bit hilarious. So I've basically, I'm doing round two, round two of what we tried to do before, but it's really weird. I don't know even what to say right now. It's insane. I can't access YouTube. I mean, I don't know if you can see this. I can't access YouTube. So I'm on my own stream, but I just can't access YouTube. So I don't know what's going on, but anyway, guys, enjoy what you're about to see. Let's try and see if this doesn't bug out. We should be okay. So I'm not sure what the hell is going on. I'm trying a different browser. Same story. I have no idea what the hell is going on, right? So what we want to do anyway, let's attempt this because the question, I think I've got another question and it's the same, as you can see on the actual how high can Bitcoin price go. So we're going to work on this. I don't need this. This is bugged out anyway. I don't need this. Let's work on this, right? So what we're going to do is we're going to try and attempt to do the same thing as we did before, but this time without the system bugging on us, right? And hopefully I can get a clear message out there, right? So what we're looking for is how high can the market go, and if it did, what would we expect, right? So I think I made a few mistakes on numbers and this and that. Right now I'm not going to do that because earlier on I was rushing. I mean, this one as well, technically I'm rushing, but not as much as before, so it should be good, right? So we're being hypothetical here and we're saying, right, what's the worst case scenario we could expect? And we're always going to use these the 236 level as our bottom range each time we step up the levels, right? So that's what we want to do. So let's do this. Let's keep on making a few steps here and continue as if we're moving towards the future someday, in 2025, 2024, 2030, whatever you want to call it, right? Doesn't make any difference. We're just going to use this and we're going to say, right, this is how we're stepping up and this is what we are expecting to do, right? We're going to continue to draw these steps, right? And we want to see what the range is, because obviously the biggest question is how high, and I think I tried to answer it on the previous video, but obviously we had some issues with the charts messing up, with the browser messing up, and that kind of created a whole bunch of issues for myself as well. Plus I was rushing because I had to go and have a meeting with somebody, and I had that, so it's been all good. I'm actually sitting in the restaurant right now, as you can see, so it's not going to be easy, but I'll do my best to see what we can do. And what we're looking at here is we're just assuming, right? This is just an assumption, nothing more. We're just saying, okay, what if we do this, and how many cycles do we think we might do this? So it's just kind of just us being really over optimistic, right? I think that's going to be a better word for it. Very over optimistic to see what kind of levels we can do. And I made a mistake here earlier on when I mentioned something. I said 48,000. It wasn't 48,000. It was actually 491,000. But anyway, let's get to this and let's work our way towards this, right? So we're kind of doing this based on the logarithmic, and I hope it doesn't bug out, because earlier on this is exactly when it bugged out. So let's use this and hope it doesn't bug out on us. It didn't, so that's really good, right? So as you can see, the log chart itself doesn't want to go too far because obviously there's a lot of data involved and it doesn't know what the future holds for us, but it's good enough for us, right? And we can use this and we can say, right, if we use this kind of a curve, so we'll switch this off just so we can do our own little drawing right now, and we use this and we say, right, this is going to be our kind of market structure, the curve that we see. And let's try and get this compacted. Right, you'll see what I'm trying to do here. You'll see, guys. So this is going to be awesome, insane, crazy, whatever you want to call it. It is absolutely mind-boggling what you're about to see. All right, what you're about to see is absolutely mind-boggling. What we're going to do is just take a simple line, put it around here. All right, so this particular level, so where this particular first top was, and we're just going to go straight through this particular level, and we're going to say, right, well, let's use the bottoms of the market as an indicator to where we can go. So we're currently in 2031, right? Let's leave that there. That doesn't make any difference, but let's just observe this on the time frame and say, okay, if this was the case, then what could we see? And we're just using the bottom line, right? Nothing more, right? And we're saying hypothetically the worst case scenario we could have is have a nice little dump and come back to this, and we didn't have that. We respected it. Now there's two scenarios here. Number one is you have the worst case scenario, and this is you assuming we're in a extended bear market, right? And what we're taking is basically we're taking this maths here and we're saying, right, if we do end up in a bear market, what's the worst case scenario we could possibly have, right? Let me zoom out of this. Yeah. So what's the worst case scenario we can have? So we take it to the bottom of the market and we say, like, look, we can have an 85% correction, right? We have an 85% correction. So if we take the Fibonacci's and we say the same thing, right, pretty much almost similar, and we use this 236, it's close enough, right? It's close enough. So that's what we're using. We're using the Fibonacci's, and that's why we're using the 0.236 to calculate what's going on. So these are the worst case scenarios we could expect, right? If we're in a bear market, we see an 80-85% dump, right? Happy days, right? That's what we're going to have. But we expect this, so we're okay with this, right? And we also know that if we do follow the logarithmic curves, then our tops are pretty much around these 1.618 levels, right? So even now, if we are to say, okay, what's the current top of the market that's possible? Well, we know it's around the 100k level. May not be 100%, but doesn't matter. Either one of these numbers is still better than what we are right now. So we use these numbers and we say, okay, that's what's going to happen. But ultimately, the Fibonacci's are always respected. So if we respect the 103,000, as you can see here, and I'll actually keep the log for now, so 103,000 here, then that's respecting the Fibonacci. And if we respect that in the next cycle, then we can see it's 155k. And also remember, when we hit this, then this becomes the target, right? And then we can take this and actually change parameters on this as well. So in the future, we can, if this was the actual bottom right now, we can change the parameters and do this, but it doesn't change the price as much. If you look carefully, it just changes it by a fraction, not as much. But the 236 is an accurate level to work out on, right? So that's why we're going to use the 236 all the time. So what we're planning is the market goes, comes back down. Worst case scenario in a bear market, this would be a bear market price. And then if we have a bull market, we should have a bull market price here. And then if we have a bear market, again, we come back down here, and we do so and so forth and move forward. So every time we're saying, well, we're going to respect the Fibonacci 1618 as long as we go up the top of the market, and the bottom of the market, we're going to skip it all, and we're going to say the worst case scenario, we're going to have an 85% dump or an 80% dump, and that's where it brings us. Right now, we do know that Fibonacci tends to respect the 618 level. So if we do fall below the 618, that is a confirmation of the bear market. If we don't, however, we can extend these, right? So currently where we are, as you look, we've talked about this many times, it's like this is similar to the 2013. Now if we just take away all of this and say, do you know what, forget everything, this is not similar, this is the first time it's doing what it's doing, right? As long as we stay below this Fibonacci line, and I want to show you this, zoom into this to show you, right? So if we look at this Fibonacci line, my bad, sorry. So if we look at this Fibonacci line and we say, right, this is where we are. If we stayed below this Fibonacci line, then basically we would have been still in a bear market. As you can see, as of last week, right? So August the 2nd, let's try and see if I can see on a daily for you. So it'll be easier for you to understand, right? Forget August, where is it? So this would be here. So this candle here, right, which is August the 6th actually, so that was a weekly candle. So as of August the 6th, right, we've been above this, and this kind of coincides with our 200-day as well. So we've had our 200-day moving average in the past 3 or 4 days, but that all kind of makes sense, right? So the 618 level kind of balances with this. So this is what we're looking for. So we know that we've just come out of the slight bearish market, bearishness that we had, right? Institutions coming in, buying, selling their profits, selling the news basically. So buy the rumor, sell the news, done this, but this did not take the momentum away. The bull market's still in play, right? So we know that as soon as we pop back up again, we kind of said like, no, we're going back up. Provided we stay above this 1618, this bull market's still continuing. Now, when we look at this, the biggest question right now is compared to other bull markets, and we can compare to the 2013, because in 2013 we had a similar situation. So if we do compare a little bit, but say this time we're going to be hypothetical and say, well, do you know what we're going to do? We're going to go like this. We're going to go like this until we come to this level, or maybe even go like this, carry on a little bit and go down here. I mean, this would be the most insane thing to see. Right? If you look carefully, if we can prolong this for a good 6 months from where we are right now, or maybe even a year from where we are right now, we can actually hit these bigger levels, right? This Fibonacci level, so we can smash through these fibs and go to this level, right? Where we're looking at the $231,000 level, right? Now, one of the biggest questions I think too many people ask, which is not relevant, right? Everyone's keep on asking is how high can it go now? That's not relevant. You see, in Bitcoin, the biggest question that you should be asking is how high can it be in 5 years, or how high can it be in 10 years? That's what you should be looking at, right? So, for example, just as I'm just being hypothetical here. If we were to calculate and say, right, okay, let's see if we can see some dates here, it won't even show it, but just assume, right, in 5 years time, so we go 2024, 2025, 2026, right, we can assume to see this as our top. You see what I mean? So we can actually see these kind of prices, right, to be our top. Then what happens is, what becomes the bottom? Right, so then you have to ask yourself, what is the bottom? And the bottom in 5 years time would be the 66k. So anyone who bought it right now is actually getting it cheaper than what it's here, right? And the same applies as you move along, and you can see the bottoms that we have for each 1618 cycle. So I'm going to name this as the 1618 cycles, because these are not market cycles, neither are they seasons or anything. These are just 1618 cycle. Means every time you go above the 1618, you then start calculating the next 1618 and move forward from there. And from that you can see the highs and the lows, but we're going to focus more on the lows than the highs right now, right? So we can see when we hit this, if we do top out around this season, our bottom should be 38. Next bottom should be 66. The one after that should be 105. The one after that should be 160. The one after that should be 236. And the one after that should be here $343,000. And the one after that is $491,000. And this doesn't want to move. Let me zoom out. The one after that, 699. And the one after that, $977,000. So we've done 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 cycles here. That's all we've done. We've just done 10 cycles here, and we're saying, right, if the Fibonacci does 10 specific cycles, where does it take us? Right, so on the 10th cycle, we can see we can expect a $2.6 million BTC. I know it sounds insane, right? But do you know what? When someone like myself spoke about similar kind of stuff, and let me put it on the weekly, it's easier. When someone like myself actually spoke about the same situation back here in 2015, and I said like, oh, we're going to go to a couple of $1,000, people didn't believe me. People didn't believe me. It's the same thing. And I didn't even expect a 20,000, by the way. I expected a few $1,000s, right? $2,000-$3,000. So when we were sitting here talking about $2,000, $3,000, people were like, you insane? Are you mad or something? This isn't possible. Same story. I mean, people who sat here and said we're going to go to $100, people thought they were insane. And this is the same thing, right? So when we're talking about these millions and millions of dollars, I know it's hard to comprehend. A lot of people find it very, very difficult. But this is the fact, right? Because we're on a curve. And the reason this curve actually works is actually because of this, right? Let me show you. The reason it actually works is a very big reason behind this is actually this, right? So the number of coins that are remaining, right? So you got to understand this, right? This is the number of coin that we will ever have. Now the key is this, the 21 million coin. The 21 millionth coin for this number to complete is in year 2140. That's 2140. So when you look at this, people forget that we're not going to reach this until 2140. So if we're not going to reach until 2140, why don't people take this into account, that how many is remaining and how much of a supply shock we're going to have? And this is kind of the key to understanding why we do these fibs, right? And how this log curve actually has an upward momentum. It actually makes perfect sense once you realize. And this is why we can expect these fib lines to be hit. Right, so how high can we go? Trust me, we can literally go to the moon, metaphorically, obviously. But BTC can go very, very high. But your perspective, if you're entering BTC, should not be for now. It shouldn't be for this cycle or this week and this and that. Like someone asked me today, he's got a small budget, and he said, what if I wanted to put £500? What would you recommend, or what would you say? Would you suggest I put it into BTC or anything? I said, of course I would say BTC, because of the maths, right? And I said, how long are you going to be? He said, I want to put it in for about 10 years as a little saving and just put it away. 500 quid. That's his budget. Happy days to him, right? And the wisest thing is just leave it there. And he's like, but if the price is too high? I said, bro, the price was too high when it was 65, and the price was still too high when it was 30. You do the maths, and now we're sitting at about $44,000, $45,000, having a nice little dip, exactly as predicted. We did predict the 42,000. It is coming, right? There's no ifs and buts about it. We're coming to test that bottom line. So ultimately, when is it not a high price? You know, I mean, people who kept on saying it's a high price, right? Everybody who's kept on saying like how the price is too high, you know, around these levels. What are you really waiting for? You know what I mean? When is that not going to be too high for you? When it comes to these levels? You know what I mean, right? 10 years time or 15 cycles time, 10 cycles time, right? So I'm going to call it cycle. So if we do 10 Fibonacci cycles and we come up to this bottom zero of $699,000, is that when it's going to be not too high for you? Do you see what I mean? So that's the key. You got to be in it, and you got to understand the maths. You got to understand the supply, right? How we're having a supply shock, and we're constantly having it, right? Because that's how many exist, and that's how many is total. So minus that. So if you minus, let's do this, 18783. Let's just do it this way. 981 minus 21123456 equals, we've only got 2.2 million BTC remaining. 2.2 million BTC remaining, and we already know that basically the amount of coins we mine per day. So if you do the maths based on that and see how many days are remaining, so we do know that in 2024 around March, I believe it is, we're going to have a new halvening. Well, we know that from that point onwards, we're going to have another supply shock where Bitcoin distribution is going to have a massive shock, but it's going to cost the same amount of money to produce. So when you produce with a certain amount of money, and you're putting the energy, the global energy, ultimately the price will reflect this. You know, the price will reflect this. So this is what's going to happen. I just hope people understand, and I hope this video kind of answered the question I had earlier and this recent question as well. How high can it go? Well, it can go high as it wants, as long as you follow the Fibonacci's. You can actually see how high it can go. So say 10 cycles from now, we can see a 2.6. Yeah, you're right. Grab a chair, no worries, yeah. So we can see a 2.6, and if we're looking at the current, like, you know, this is like how high it can go. And obviously if we're looking at how low it can be, then we understand that in the future these are the low prices that we should be looking at. So have a look at this video. I'm going to go and attend some customers, and I'll talk to you guys later. So other than that, guys, I hope this was okay. Like, share, subscribe. As you can see, I am getting busy right now, so I'm going to